Leverage, an unbelievably powerful tool that properly used can greatly enhance your wealth. Let's get right into it right now. So, leverage is when you apply debt to assets that you currently own. Think of a lever where you apply a gentle amount of pressure here and you can move a ton at one end, right? So, the same thing matters and happens with your finances. Proper leverage is effectively borrowing funds off of assets that you own. Now, you can't borrow funds on any assets that you own. You must borrow assets on assets that are able to be collateralized or that banks and lenders will recognize as being proper collateral for the purposes of borrowing. First off, I want to address the myth of a free and clear. There's this concept, and someone may have told you at some point in your life that the best thing to own are free and clear assets. I believe that is a myth. Sure, there are assets that are really good to own free and clear, like a used car or a washer dryer. Those, it makes sense to own them free and clear. But larger, more valuable assets, not necessarily the greatest thing to own them free and clear. See, the myth goes a little something like this. If you're debt free, you're maximizing your money by avoiding to pay interest. But that's not how the wealthy people operate in this planet. That's not how the wealthy get richer. So if you want to get richer, the best way to do it is through healthy and prudent leverage. So wildly successful business people, they always seek capital in the form of business loans, sale of company stock, or other financing. And they do it because they need capital, right? So they use an existing asset, shares of their company, real estate, infrastructure projects, and they use that to generate cash flow for them to further expand their business. Successful real estate investors, they utilize mortgages or the bank's money in order to purchase assets that they otherwise would not be able to purchase. It's very difficult to save up for the purchase price of an entire home, whether it's $1 million in Vancouver or 400 grand in Manitoba. It is tough to accumulate 400 grand in Manitoba or $1 million in Vancouver. Therefore, you leverage. Think about the rich and wealthy. Do they accumulate all of their cash and do they keep it in a liquid cash format? Or do they put their money to work, leveraging themselves and generating new wealth? The answers are yes. So the wealthy borrow against their assets, they leverage. They also purchase real estate through mortgages, and they also invest their cash and keep very little of it so they can have more investments, property, and portfolios. Okay, so let's look at 3 reasons why you would want to have some leverage in your personal financial situation. First off, the ability to have leverage will improve or enhance your flexibility, your financial flexibility. Why? Because without leverage, you're likely going to try to divvy up your assets into different compartments. Maybe you have a TFSA savings account, an RSP savings account, an emergency fund, an RESP saving, and you're compartmentalizing all that wealth and you're actually drawing down and you're not using your cash in the most efficient manner. You end up with having too many accounts and not enough money. And having a ton of savings is great, and you might have 6 or 9 or 12 months of cash sitting in a cash account. But really, that's not the most optimal way to do it. You should be leveraging your assets and having all of that money work for you at all times. Having assets that can be accessed in an emergency situation, that you can leverage. So whether it's a home equity line or whether it's a portfolio of securities that you get access in a situation where you need to access it is immensely valuable and something that you cannot forget. 2, leverage can also increase your cash flow. So what does that look like? Basically, think of it this way. You take capital that you have, you buy an asset that produces cash flow, and you borrow funds to finish the purchase of that asset. Now, that could be a portfolio of securities, but it could also be a rental property, or it could be another type of asset, a business or something that's generating cash flow. And you don't need to have the full $1 million to buy the business. You can take maybe 200 grand down, you borrow the 800, and then you're generating cash flow with your business. Or you do the same with a rental property, right? You buy a $500,000 rental property, you put maybe $100,000 down, you borrow 400 and you're generating cash flow. Same thing with a portfolio. You borrow, you invest, portfolio generates income, generates more income than the cash flow it's costing you to borrow those funds. And voila, you're generating positive cash flow. Now, you need to be very careful when you're doing this, that you've taken a look at your cash flow situation, of you making sure that even with an increase in interest rates, your cash flow can remain positive. Can you mitigate that risk by locking in interest rates at a lower period for maybe a 5-year or a 10-year period? Because you want to make sure that you don't get hampered or hurt if interest rates go up, because that is going to be your cost of borrowing. Number 3, leveraging also expands your total assets or expands your balance sheet. Now for that, back to the same prior examples, we talked about, leveraging to buy a business. Over time, you're going to pay down that debt. The business should increase in value. Therefore, your liabilities are going down, your assets are going up, you're increasing your balance sheet. The same thing will happen with a rental property. If it's properly managed, over time, you're going to pay down the debt on your mortgage. Over time, you're going to collect some cash flow. The real estate should increase in value. And voila, you've increased your balance sheet. Or with a stock portfolio that's properly managed, you borrow, you invest, you grow your balance sheet. Over time, you pay down the debt. It's a phenomenal way to increase your balance sheet. A study came out in 2019 by the US Federal Reserve showed that the average homeowner had 40 times the net worth of the average renter. So in other words, buying assets, leveraging to borrow, to invest, and then being your own homeowner has generated a net worth that's significantly higher than if you were to just continually rent. Now, obviously, you could argue that the individuals who are homeowners are naturally more wealthy, and the individuals that are renters are naturally at the lower end of the spectrum, but the point is made nonetheless. So how should you leverage your assets? So first off, take a look at your balance sheet. Look at every single piece of asset that you own. Artwork, stamps, rare hockey cards, vehicles, homes, cottages, Canada savings bonds, GICs, cash, stock portfolios, registered accounts, tax-free savings account. Put them all on a ledger. Every piece of asset that you could assign a value to. Now ask your bank, ask your lender what they would need to lend on your balance sheet. Sometimes they'll need appraisals, sometimes they won't. As long as you can identify and itemize all of your assets, you at least have the possibility of having someone lend you on them. The most likely situation is that if you have a piece of real estate, a home, a cottage, a rental property that is not fully leveraged, the most likely possibility is that your bank is going to be willing and want to lend money to you up to maybe 75% or 80% of the appraised value of that real estate. That's the simplest way to do it. So if you want to borrow funds to invest in a business, or borrow funds to invest in a rental, or borrow funds to invest in your stock portfolio, to leverage, the easiest way to do it is likely through either a home equity line or a mortgage on your real estate. Sometimes it will let you borrow on your overall net worth, and they'll give you a percentage of your overall net worth, but you do need to itemize all your assets before you can start to think of using them as collateral. Now, finally, I want to give you a caution here about over leveraging. Leverage is a two-sided sword, so be very careful. If you end up over leveraging and you can't make your cash payments, you end up being caught in a short squeeze, or a situation where your costs are increasing, your revenue is decreasing, you don't have the cash flow to make the payments, therefore you need to sell the property. And then typically that happens during a recession or during a period where inflation and interest rates are going up. So you have to be very careful that you've thought about the cash flow required for leveraging. All right. So as long as you've thought that through, as long as you've taken a look at your plan B, what happens if cash flow is not being made on these assets, whether it's a business or an investment or a portfolio or a rental, whatever it may be, just think of a plan B. What happens if I actually can't make the cash flow payments, the debt payments on these investments? Because it has happened. It has happened before. There's a ton of people that got wiped out in the 80s when inflation and interest rates went through the roof. And it will happen again in the future. And it's going to happen again in 20 years and in 40 years. People tend to get too greedy. So the key that I would suggest for you is to make sure that your leverage is proportionate to your income. Make sure that if you own rentals, you take a look at what would happen in a recessionary period and what your rent could fall to if you needed to trim rent to fill your vacancies. Now, if you have strong cash flow, a strong income, and a really strong balance sheet, it becomes less of a concern because you could fund it yourself. All right, that's it for today. So thanks so much for tuning in. I'm Rob Tetrault from robtetrault.com. If this is confusing to you and you'd like to book a no obligation consultation to chat about this or anything else on your mind with your investment portfolio or your investments or your leveraging, please go to www.speaktorob.com. We'd love to book a no obligation consultation with you to chat about this and anything else. Thanks for tuning in, guys. I'm Rob Tetrault. We'll see you in the next video.